Hi everyone, welcome back to my channel Astra. Thanks for joining me today. If you are new to this channel, please consider subscribing in this channel. Today we are going to discuss on the topic accounting standards. So what is accounting standards? These are written statements. These are written statements of what? These are written statements consisting of uniform accounting rules and guidelines. These are issued by the accounting body of the nation, such as ICAI. Then these are followed while preparation and presentation of financial statements. So simply we can say accounting standards are written statements which consist of uniform accounting rules and guidelines which are issued by accounting body of the nation such as ICAI. ICAI refers to Institute of Chartered Accountants of India, and these are to be followed while preparation and presentation of financial statements. Okay. Then one thing to be remembered in mind that these accounting standards cannot override the provisions of applicable laws, customs or usages and business environment that prevails in the country. Cannot override means these accounting standards cannot go beyond the provisions of applicable laws, customs, usages and business environment that's prevailing in the country. So simply we can say these are accounting statements which are used or which are consisting of uniform accounting rules and guidelines which are issued by the accounting body of the nation, and these are to be followed while preparation and presentation of financial statements, and these never can override the provisions of applicable laws, customs, usages and business environment in the country. Okay. Now we can discuss the various accounting standards that are existing in our nation. Accounting standards are issued by the Council of the Institute of Chartered Accountants of India, and it has so far issued 32 accounting standards. Remember the number 32 accounting standards, and these are mandatory in the sense that these are binding on the member of the institute. That is why these accounting standards are mandatory in nature. Then about the various accounting standards, AS1 regarding disclosure of accounting policies, and AS2 about valuation of inventories, and AS3 regarding cash flow statements, AS4 contingencies and events that occurs after balance sheet date, then AS5 regarding net profit or loss for the prior period and extraordinary items after and changes in accounting policies. Then AS6 is about depreciation accounting. Here AS2, AS3, AS2, AS3 and also AS6 got revised. Now accounting standard 7 regarding construction contracts. Then accounting standard 8 for research and development, that is accounting for research and development. It has since been withdrawn. Then AS9 about accounting for revenue recognition. Then AS10 regarding accounting for fixed assets. Then AS11 consists of accounting for the effect of changes in foreign exchange rates, that also got revised. Then AS12 accounting for government grants. AS13 is for accounting for investments, and AS14 we all know about amalgamation treatment. So as per accounting standard 14, the accounting for amalgamation treatments are done. AS15 is about retirement benefits, accounting for retirement benefits in the financial statements of employers. Then AS16 about borrowing cost, and AS17 consists of segment reporting. AS18 includes the related parties disclosure treatment. Then AS19 is about leases. AS20 about earnings per share. Then AS 21 about consolidated financial statements. AS 22 is about accounting for taxes on income. Now AS 23 is consisting of investments in associates in cash flow statements. Accounting Standards 23 consists of accounting for investments in consolidated financial statements. Then AS 24 is about discontinuing operations. Then AS 25 about interim financial reporting, and AS 26 is regarding intangible assets. AS 27 stating about financial reporting of interest in joint ventures. Then AS 28 about impairment of assets. Now AS 29 regarding the provisions, contingent liabilities and contingent assets. Then AS 30 consists of financial instruments, its recognition and measurement. Recognition is simply I put R and measurement I put as M. So financial instruments, its recognition and measurement comes under accounting standard 30, and AS 31 consists of financial instruments presentation, P4 presentation, and AS 32 is about financial instruments about its disclosure, D4 disclosure. Okay, so these are the various 32 accounting standards so far issued by the Council of Institute of Chartered Accountants of India. Now, what is accounting equation? Accounting equation is an equation which signifies that the assets of the business are always equal to the total of its liabilities and capital or owner's equity. So, it can be expressed as assets is equal to capital plus liabilities. This accounting equation also called balance sheet equation because it depicts the fundamental relationship between or the among the components of balance sheet. We know the assets, capital, liabilities, these are all the components of balance sheet. That is why this equation is called balance sheet equation, because it states the fundamental relationship among the balance sheet components. Okay, so it can be expressed as an equation like this, that is assets is equal to capital plus liabilities. Fine. Hope you got the idea on what is accounting equation and how it can be expressed. So that